All right, you guys ready? Yeah. All right, I have 35 servings of vegetables and 20 grams of fat in these 2 cups in front of me. Fat, veggies. Don't need solid food. Yeah, Jim. Excuse me. Wow. Jim, I got your email. And let me turn the music down. Oh, it is down. All right, let me just turn it off. All right. Yeah, I canceled the QuantBox Live a week ago, so it wasn't on the schedule. Or at least it shouldn't have been on the schedule. I thought I double-checked it to make sure it wasn't on the schedule, but if it was on the schedule, I apologize. All right. Guten Morgen. Comment allez-vous? How are you? Welcome to QuantBox Live. No. Yeah. Hang on. Let me get another. Yeah. Yeah. I got to get used to the new chat feature in the community because I guess I could have just said yesterday, hey, just a reminder, just a heads up. Yeah. And I know in yesterday's, I watched part of the video of yesterday's news trading, and there was like, hey, I wrote this stuff, right? And don't know how to get it to you. It was a comment I heard. I'm like, oh, we need to be using, because there's a chat just for the news trading team, right? And so there is a way to communicate better. For me personally, I got to get used to that. How do I look? Do I look good for the Fed day? It's an important day. Jumbo. It's an important day. Got to look good. Got the collared shirt on. I'm a businessman. So anyways, hey, welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Boom, 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 boom. Boom, 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 boom. Yeah. Very cool. You know what? I just realized I should add something to this. I'll do that later. All right. So anyways, the value ladder. How do you become a successful Forex trading business? You get a good broker. You have to. You can't be a trader without a broker. It's the bottom line. There are 2 models in the world of brokerages. One is basically a dark pool. So they take all their traders, they throw them together, and all their traders just offset each other. And the business model is based on, or it only works, by the way. That model only works with the assumption that every single trader will fail. All right. Now, the other business model is called an ECN, and that is an open architecture idea. Like, think of the dark pool as a closed architecture. You know, broker XYZ is just matching all the buyers and sellers inside of broker XYZ. The money never leaves the broker. Cool. Great. The other one is an open architecture in the sense that you place a trade and it leaves the broker and goes to liquidity providers like banks. And you get off, your trades are offset by people actually in the interbanking system. Now, that business model only works if you're successful. So this is your choice in choosing a broker. The typical business model for a broker only works. The broker will go out of business if you're successful. Most likely they'll just kick you off or hedge you. Okay. The other business model only works if you're success. Because if you lose all your money, you stop trading and you leave. Well, that broker would eventually go out of business if all their traders are dying on the vine. So they need and want you to succeed. You see the difference in attitude based on the technology that they use? Traders Way values your education because they want and need you to succeed. Otherwise, their ECN platform will fail. They're cheering for you. They're on your team. Okay? Now, once you have a good base, now you need good tools, right? Hey, you might be a good carpenter, but you need good tools too, huh? Oh, I got you some good tools. Here's the one I released yesterday. Okay. The server time here is off by 1 hour. This says 9, this says 8. So anyways, I've already let support know. Okay. It's just an issue on the server. The server, boop. So they just did a +4 instead of a +5. All right. So we got that fixed, or it will be fixed. But here, this is what's happening. This is a brand new tool at TRADARS. And what it's looking at, so what day of the week is it? It's Wednesday. What hour is it? It's 9. And that's the interesting part. This is the proper time. That's not. So anyways, easy fix, I think. So it's Wednesday at 9, hour 9. On Wednesday, Euro Swissy is one of the best movers on Wednesdays in this hour. Okay, you could also look at this currency, and this currency, and this currency, and this currency, and this currency, right? Look, all of these tend to move this time of day, which is good because earlier in the day, sorry, I get all that butter stuck in my throat. Last night, there was only 5 things you should be looking at. Right now, it seems like all the currencies are moving well. Well, it's a market open. But by 9:30 or 10, because this is updating every 15 minutes, excuse me, gee whiz, it's not even clearing. I have butter in my throat. Hey, don't judge me, I'm in kurtosis. There we go. Got to get serious. So anyways, so what's happening here? Here's the projection, the range for Euro Swiss franc on Wednesdays at 9 a.m. over the next 1 hour, 4 hours, and 24 hours. We have calculated with 6 months worth of data the implied volatility of Swiss franc right now, the rest of the session, and the rest of the day. And we do this for actually everything. It's amazing. So let's go to like page 3. Okay. Aussie Kiwi, it only has medium volatility. Okay. Pound Kiwi only has medium volatility. It might move, but all the other ones on page 1 are better on Wednesdays at 9 a.m. So this might be, you might make money on this one, but you're betting on the wrong horse. Do you understand that? One of the major things all traders need to be doing is watching the right thing at the right time. That is difficult. So look at this. Oil just moved to the top. Look at that. It just moved to the top. You should be watching oil. Wait, what? It just updated. Yeah, Brent and WTI. Wednesday night. It just updated while we were using the tool. So it's updating in real time. Neat. So here's the projected range, implied volatility. It doesn't tell you direction. It just tells you going back 6 months, looking at every Wednesday at 9 a.m. Eastern Time, how much does WTI move? And there's the hourly range. Okay? Over the next 4 hours, there's the 4-hour range. And over the next day, there's the daily range. Cool. So, okay, expected price range. Stop loss and take profit placement has often been a random choice based on little empirical data. The graph illustrates the expected price range movement for the selected instrument for the next 1 hour, 4 hours, and 24 hours. The information is calculated for specific times of day and days of week in order to provide the most accurate expected measure of volatility for the current market conditions. So, if you have a trade duration in mind, use the graph to help you set your exit levels appropriately. Exit levels meaning stop loss and take profits. Okay? So like if you were a buyer in here, notice how this was projected earlier. Somebody bought on the implied volatility 4-hour low for bulls. See, bulls buy low. You can put your stop below the daily low and at least minimum go for the daily high. But most likely, this could be a swing trade. You could be in this for 5 days. You could be in this for 5 weeks. This is just showing you implied volatility for Wednesdays, right? Or the next 24 hours. The volatility for the next 4 hours, right? Or range, if you will. Implied volatility for the next hour. So if you're a bull, yeah, you could buy here, put your stop there, and let it run. And this is updating in real time. Can I get a OMG? Okay. Silver on Wednesdays at this time frame moves this range. And you're like, that's not a big range, but it's big relative to all the other things that are moving right now. It's not just its totality, its absolute measure, but it's the relative measure to everything else at 9 a.m. on Wednesdays. Focus on this, not that. Now you know what to look at, and you know what is likely to happen based on quantitative analysis of past hourly, 4-hour, and daily ranges. You have an live, real-time implied volatility indicator for every freaking asset on the planet practically. Look, I even turned stocks off. Wait, what? Let me save that. We can do this for the stock market. Here's FTSE. FTSE's pretty good this time of day. And I can show you the range it's likely to move. So it's pretty good, okay? So if you think we're heading down, there's the implied low. Now, as the stock market opens, you might find that some of these other things, here's Apple, here's the 10-year T-note. 10-year T-note tends to move, Okay. But look, it was better to trade the 10-year T-note a couple of hours ago. On Wednesdays between 7 and 8, right? 8 and 9, that 2-hour period is the best time of the day on Tuesdays, and probably most days, to trade the 10-year T-note. It's on this list, though, because it's still a pretty big mover relative to everything else. But it looks like over the rest of the day, we'll lose the volume and volatility. And you're probably better trading Ethereum or Apple in the next few hours. Okay, what does this say? On Wednesday, in the 9 o'clock, so around 8:30 to 9:30 is the, right? And then 9:30 to 10:30 are the best times of day to be trading Apple. And it just dropped inside our range implied volatility indicator. Hey, Liam, I'm really sorry to hear that. Yeah. I got 99 problems, but a pip ain't one. Yeah, sorry, buddy. That's just a joke. Hopefully it makes you laugh. That definitely has to be a t-shirt, though, huh? All right, NASDAQ. There's a lot of things moving. This is a good time of day. You can see the first two pages are, especially when you add stocks, like here's Amazon. What's Amazon likely to do? Oh, yeah. Now, look at the chart. Now, you add this with the chart, and you could probably do some pretty wicked analysis with this, right? You're like, okay, bro, up, down. Okay, somebody bought it on the 4-hour implied low and take it to the daily, right? Now, you have to then analyze and say, is it worth the risk? Because your stop should be below the daily low. It could just be below this and just say, okay, for a day trade, it should be here. For an intraday trade, like a market open, as long as it stays above the implied 4-hour low, you could put your stop there for intraday. But if you're going to be a day trader and you're going to be in this for a day or two or three, maybe develop into a swing, your first stop should be here. And once it's made a higher high, higher low, higher high, then you can move your stop up here. Really? Only 2 people are impressed with this? 3 people are impressed with this. No, sorry, 4 people are impressed. I guess you don't understand the importance of this information. And it's updating in real time. So you could just, in theory, just sit on this page. Because you'll see throughout the day, I would imagine, so we have 2 pages of this is a good time to trade. Obviously, it's a good time to trade. Okay? Obviously, it's a good time to trade. It's a market open. Okay? Well, which of the, let's say there's 50 assets at least on these 2 pages. Which ones should you be watching? Like, how do you put them in order? Well, watch WTI, silver, euro pound, okay, Bitcoin, gold, okay. Look at a lot of the dollar pairs are sort of halfway out there. So euros down here probably in the top 20. And we're already testing the top of the range. Not a great trend though, huh? But obviously this might, do we have anything important today on the calendar? Could it be the Fed rate decision? Yeah. Okay? Check this out. The Fed's going to cut. TRADARS took off all other possibilities. But anyways. Oh my God. Yeah. Okay. Obviously, the Fed rate decision is important. Sorry. So if you are a member of Investor Bootcamp as a swing trader or a day trader, you're also already a member of TRADARS. If you're a member of QuantBox, you're already a member of TRADARS. Okay? So if you signed up at TRADARS, or if you signed up at QuantBox, or if you signed up at Investor Bootcamp, you have access to this Fed meeting today. And I need you to log in to tradars.com. Yes, I bought .com for thousands and 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 thousands of dollars. No joke. So go to tradars.com. Go to the coaching tab and RSVP. Okay, watch. Boom. Add it to the calendar. Okay, Google. Okay. Fed meeting live. Save. Done. Okay, how nice is that? Once you are set as attending, it'll send you a reminder email, and it will also then send you the login link. No, I'll add that, JP. I noticed that. What occurred was last week I was out of town, so I canceled what I thought was the individual meetings, but it looks like I canceled all of them. So anyways. Okay. Oh, yeah, good question. Eskimo says, how do you get these tools? Right now, I believe maybe everybody has them. I'm not sure. But I'll show you where the long-term answer is. It still didn't update. Damn it. Sorry. Using my potty mouth. All right. Okay. All right. You can join the news trading team for scalping the news and other short-term trading strategies, which gives you... Oh, let me go back. Gives you access to the scalping tab. In the scalping tab, there's a news radar. There's a scalping radar. See, commodities. Oh, you want to scalp Forex? Cool. You want to scalp stock indices? Cool. All right. And then the new volatility radar. Cool. And I'm working on a super secret number 4 radar. And I hope I can pull it off. Right now, today, 2 different development teams are meeting each other for the first time, and they need to collab to put the beta onto the site so I can test it. Okay. All right. So you'll get all that by joining the news trading team. We have a technical team, which is the original TRADARS. We have the fundamental team, which is QuantBox Live. Right now we have the news trading team that I'm building. And all of that includes the base subscription, which is the swing trading group. So that's cool. So it's like swing trading group plus the news trading team. Great. Or you join this and you get everything. News trading, fundamental trading, technical trading, swing trading, everything. So $200, $400, $600 a month? No. 297. Okay. Yeah. So monthly, annual, and news trading. Those are your three choices that will unlock the news trading team. Oh, let me know, Don. Tell me more. Yeah, tell me more. Yeah, I love feedback. Even if it's, don't send me a nasty gram, but give me some feedback on how to improve. If there's something missing, you need to let me know, and I'll fix it. Raymond, what's up? It popped up in my brain, and I apologize, Raymond, because I respect you. Borat. That scene in the Borat movie where he's like, our potassium is better than Kazakh potassium. I'm like, our chromium is better than their chromium. We have a number one, the best of chromium. Oh, yeah. Anyways, no disrespect. All right, so get on with it. Hey, and by the way, Don, I'm serious. If you're like, hey, man, bring this back, tell me. Tell me what to bring back. Tell me how to do better. So we have Fed meeting today, obviously. So, hey, man, these markets are probably long jammed, except for degenerate gamblers, huh? Yeah, well, sorry. 10-year T note up, oil down, gold flat. 2,600 though. Remember, we were stuck at 25.50 for a long time. We popped $50 and it was a pop and stop. Doesn't shock me. We're waiting for those moving averages to catch up. Oh, I see. I see what you're saying, Don. Yeah, here's the thing. Here's what if I may make sort of a comment on that. I think what I used to do, Don, is express the analysis I was doing in my head. I'd read the reports and I'd come to conclusions. And from time to time, I might pull out a sorry, it's that butter. From time to time, I would write on a notepad or on the screen, and I'm like, okay, so you shift this and you shift that, and you look at this and you look at that, and here's the trend of this and here's the trend of that. Okay, that's cool. But now that I started building QuantBox, right? What's different is I'm showing you how I get to these conclusions. I can show you the data now. Not just hey, I read it over here, or I went to the Fed and I drafted this chart and I looked at it and I thought about it. Oh, I read this report. See, part of it, what's tricky, is not only do I read the reports, but I read all the reports week after week after week. And I form in a way, I don't even know if it's accurate, but I think the way the human brain works is I formulate a chart in my head of all the economic data out of the United Kingdom that I read. Inflation and jobs and the central bank summaries. And you get this big, long thing in your brain, and it comes to, okay, UK good, UK bad. And I talk about some of the more recent things that got me to that conclusion, right? So now, Don, I can just show you. Raymond, that is on the to-do list to update on the website. Best thing is you and I just need to have a Zoom call. Or I don't use Zoom very often. Google. You know what drives me nuts is all the corporate people. Now that I'm on boards, I have to work with corporate people again. And they're like, we're going to do the Microsoft crap. And I'm like, oh my God, it's so terrible. I can't believe corporations use Microsoft, but I guess they're stuck with Windows. But anyways, you and I need to Zoom, so to speak, Raymond. And let me just tell you about it. Yeah. Here's the best thing I can tell you. When we started, my goal was to build a portfolio that at least mimics the S&P 500. Oh, Raymond, there is like 16 hours of videos you need to watch for the next meeting. So you kind of need to just join now and then get on with it. There's an entire training course, and then you need to watch the first meeting. Our first meeting, Raymond, was something like 7 hours long. And you have to watch the first meeting because we read the prospectus of all our investments and stuff like that. And so you really need to get to know what we're in. Like, oh my God. So yeah. So it's probably 12 hours plus the 7 hours, but there's an hour break in there. So yeah, it's probably close to 18 hours that you need before you even get to the first meeting. Yeah. So anyways, let me go back to this. Here's what the goal was in November. We wanted to create a portfolio that at least produced the long-term returns, the historical returns of the S&P 500, which is 8%. Now, you might argue as high as 10%, depending on your measure and your time frame and stuff. Okay, great. So we all agree it's 8 to 10. Okay, great. We want to get those returns. But it would be great if we could design a portfolio that can produce the long-term average of the S&P 500, but with significantly less risk. It's a worthy goal, right, Raymond? You want to be in a situation when the stock market collapses, you'll be fine. But on the long run, you get the average. You just get the average with less risk. You're not trying to become a billionaire. You just want to have a steady return with no crashes. Okay, that's what we want. Now, the second part of that, so I guess it's number 3. You want the long-term average or better. You want significantly less risk if possible. And third, you want a significant portion of your returns to be cash returns, not asset appreciation. You want cash in your pocket. So it's no good if Apple goes up 50% because you can't spend it because it's theoretical. You own a stock, the value went up, but the money's not in your pocket. You'd have to sell the position. Now you don't own stock. Now you own cash. Now you can spend it, but now you got to reinvest it. But you were already in something. So there's it's too active for you to build a portfolio where you're going to make all your money with asset appreciation. That's active trading. We're doing portfolio construction and management. So how do you make your money work for you? You don't want to, this isn't about trading where you flip stocks every day. This is I'm building this portfolio for 3 endowments right now. Yeah. So how do we produce without flipping stocks? How do we produce returns without actively managing it like day traders? Okay, so we need income. We need cash because the endowments I manage, the nonprofit groups, need the cash to run their nonprofit without spending the money. So you never touch the principal, but you can spend the cash income. So we favor income over asset appreciation, but we don't want to lose assets or lose valuation of our assets if the stock market crashes. But in all situations, regardless of the stock market up or down, the nonprofit groups need the cash. Now, for me, in my retirement account, because this is a pension fund, I need the cash because if the stock market drops 30%, I'll still get paid and I will buy the dip with the cash I earned. So I'm dollar cost averaging. I'm buying the dips, but not with my money. All right, with the income I've earned. So we have all these strategies around the income. Okay, so we started in November. It's only September. So we're only 10 months into this experiment, right? We're producing 50% more profit than the long-term average. We're earning almost 12% cash. And we have about 75% less risk. So let's just dumb it down. We're taking half the risk and getting 50% more reward. And the vast majority of it is cash in our pocket. So when I'm 102, Raymond, the money is just going to come in. I can, instead of reinvesting the money, I can just spend the money. I'll never run out of money. The portfolio will just keep producing more and more cash. I can live on that cash, and the principal never goes away, so the money just keeps earning money. And it's like an ATM for me. When I'm too old to work, it's just going to be spitting money out. And right now we're looking at like per million, $120,000 a year in cash. If I have $1 million in this account, it's going to pay me $120,000, $10,000 a month forever. I'll just keep getting $10,000 a month for decades, and my $1 million will still be there. It's just, oh my God. So what do you want to do? You want to get 10 million in there. So it's paying you $1 million a year and you'll never run out of money. You'll just another million. You'll get 1 year older and another $1 million. 1 year older, another $1 million. And the other cool thing about this portfolio is it pays you every month. You don't have to wait till the end of the year. Every month you just cash, here you go, payday. Oh, nice. It's kind of like having a job, Raymond, where you do nothing and you get paid on a regular basis. I mean, it's not paid on one day in the month. You just keep earning throughout the month. So like the numbers that are being generated as far as risk-adjusted analysis, this portfolio is so good. And I'm not giving you hyperbole here. I'm not pitching. Right? Nobody here can invest directly into this fund yet. But when you do risk-adjusted analysis, it's so good, it's truly unbelievable. To the point where I can give you the numbers and you won't believe it. You're like, nobody has that. Like, for example, my Sortino ratio is 8. You're like, what do you mean 8? 2 is good. 3 is unbelievable. But what do you mean 8? Like, there's no 8. I'm like, I have an 8. Do you know what that means, guys? When it measures based on the performance of the portfolio, when the market is down, how much is the portfolio down? Because it's only doing risk analysis, risk-adjusted performance analysis when times are bad. It ignores all the upside. It only looks at how did this portfolio do when everything was down. And it's so extraordinarily good that the numbers don't even make sense. Because if I have so little net downside volatility, then my return should be nearly zero. But I'm doing 50% more than the average. So it's like, Well, that's not possible. Well, I have 10 months of performance. I mean, like, it's really, really something. And I'm rolling this out for nonprofit endowments. And I'm doing it for free for them. I'm not charging a management fee and stuff. Yeah. So what I'm saying, Raymond, is this is real. I think there's 75,000 of my money that we are investing at the Council of Investment Advisors. But there's significantly more than that I'm managing for charity. Many times that. Like, it's real. It's happening. I had a major Wall Street firm I've had 3 meetings with a major Wall Street firm reviewing this portfolio. You know, like, it's nuts. It's nuts. Nobody's seen anything like it. So anyways, there you go. Maybe we don't have to have a meeting, Raymond. Maybe that was it. I have nothing else to say. We just had our meeting. If you want to get together for a coffee and a cigar, we can do that. I had a brutal meeting with a senior executive at a major Wall Street firm that tried to bully me. I rolled that guy over. I'm like, I mean, no joke. I told some of you guys, but he says to me, we had over 270 PhDs review our portfolio we built for you. And our CIO, our Chief Investment Officer, and his team reviews this portfolio on a monthly basis. Which, what he's saying to me is, how dare you come here and tell us you don't like the portfolio we constructed for your nonprofit? And I said, how often do you review it? He's like, quarterly, but usually monthly if needed. Your chief investment officer and his team of 270 PhDs. And he's like, that's right. And I said, so why are you underperforming? He's like, what? Well, you have a Sharpe ratio of 0.5. You're producing 2% income, which is way low for an endowment. And you built this endowment fund, right? And you're underperforming the market. And when you look at your Sortino, you actually do worse in a down market. And you review this every month. What would it take for you to change the portfolio? Oh my God. You should have seen him. His tie got really tight. So I don't do that to be an asshole. My job is to protect the money for the charity. Would you agree? I have a fiduciary duty as a director of the corporation. Right? So it's like, don't you push me around, right? I'm your client. I reviewed the portfolio and it sucks. So don't give me your 270 PhD bullshit. Pardon my French, guys. But what I'm saying is I'm informed. This is what it all comes down to. Look at TRADARS. You are informed. Don't let people push you around because they have a big title and a fancy suit and went to an Ivy League school and they're like, how dare you, Raymond, come into this building? Don't you see how nice our skyscraper is? Right? Don't you see how nice this conference room is? Don't you see I'm wearing a $2,000 Armani suit? And Raymond, you come in here and you're going to tell me we're not doing it right? I'm like, yes, you are not doing it right. And let me tell you why, right? It's because, not because you're an arrogant prick or I'm an arrogant prick. It's because you're informed and it's money, guys. Your job is to protect and grow your wealth. And I never want you to be pushed around by somebody else because you are the boss and I'm teaching you to be the boss. And I want to let you know that I roll like that in the real world, not because I'm arrogant, because I'm informed. And nobody can bully you when you're the smartest person in the room. So that's what I'm making you, right, Don, with all these new tools? You're like, okay, what's the market like before a Fed meeting? Look at this, guys. You just looked at 18 different sources of information. This is real-time information on 3 time frames looking at 8 different markets. And right now, you should not be looking for trades. Why? Because you know better. Because VIX is up 8.4%. Because the yield on the 10-year T-note is up 0.76. Because yields are flat on the 2-year. Gold is up 3.37% week over week. The S&P 500 is up 1.45. The yen is stronger by 1.35. Dollar is weak by just about 1%. And the put-call ratio is down. Add it all up, niet. We just looked at 8 different constituencies, completely different markets, and we just asked them, hey, options traders. Okay? Hey, options traders. What are you doing today? What are you doing right now? How are you positioned? We're bullish. 1 billion options contracts. So you're like, oh, well, that's nice. Hey, hot money traders. Look at this. This is flat for a day and now up towards the 8-day moving average. So directionally, it's bullish as far as trend, but for the last day or so, this and this, neutral to actually bearish. Now, this will almost certainly be like this by the afternoon. Okay, you see? Okay, that isn't necessarily bullish. Okay, this is bullish. Okay, this is bullish. Okay, the down part. I guess I should do it like that. Bullish, flat. And then the other thing is when it's on the red line, okay, not bullish at all. Bearish, in fact. If you're above that line, that's bearish. Okay, so we are below the line. It's bullish, but the relative change of flat to up over the last couple of days is not bullish, but it tells you we are probably approaching that Fed meeting. And we already have all of this. Like, you don't have to go through this level of detail. You can, but you can just look at this and like, okay, there's nothing to do right now. Money is not entering the market. If you see money, so if you're looking at a market that's actually moving right now, and you're like trading Euro Swiss franc or something, the only people trading right now, according to this research, are degenerate gamblers and underinformed. Probably not large institutions betting on the Fed. Oh, good to know. Yes, very good to know. And it's 60-40. Okay, 60-40. It could get messy. One would expect the Fed cutting is good. All right, that's good for the economy. So you would expect the dollar to weaken and the stock market to rise. The thing is, about, let's say, half the market is wrong. 50 versus 25. So if they cut by 50 basis points, well, it could be really, really good. The stock market could really rally. The dollar could really weaken. And then people then could possibly say, oh God, Why did the Fed cut by 50? Are we hard landing? So what happens is fancy pants Wall Street people, fancy pants. Do you guys have fancy pants? Are your pants fancy? Fancy pants traders, okay, they look at the skew of the normal distribution. And they're talking about the tails of the distribution. Okay, there's like a soft landing. Okay, and a hard landing. Hard landing is a recession. Soft landing is avoidance of a recession. Harding. See, I can't do two things. It's amazing. Hard landing is what I'm supposed to be writing. I don't know what I was writing. I was thinking about the other thing. All right. So these are the tails of the normal distribution. What the market has done, in a way, if you want the Fed to cut by 50 basis points, most market participants are just saying, well, that's really good, and the Fed is really late, and they need to cut because they're late. Okay, that's an argument. It's not quantitative. It's a feeling. You feel like they're late. You think they're late, but not quantitatively. Okay? So what'll happen is if they cut by 50 in the Fed's mind, it's because they want to avoid a recession. So at first, like the stock market could go up, and then they're like, wait, does the Fed think we're going into a hard landing? And then the skew here changes like this. And you have a smaller right tail and a larger left tail. And then you find out, well, that's bad. If we're going into recession, that's bad. So at first, we get a rally because the Fed cut, and then you're like, wait, are we going into recession? And guess what? The market could come down. The dollar could go up. And guess what? To me, what that means is 2025, the stock market, instead of going up 20% a year, goes up 10% a year. Okay? Not 20. And if you already bet on 20, then all of a sudden you got to unwind your bets long, and that brings the stock market down. You see? So be careful what you wish for. I look at that and I'm like, I get it. Lower interest rates are good, but the psychology of it may be bad. Like they'll have to cut by 50 basis points, and then Powell will have to come out and explain to us that there's no hard landing, that they just want to get on with it, that there's no fear of recession at all, and that they just want to get on with it, and maybe even say, and from here it is not likely to be 50. It was like one and done on the 50. Just, or something. Or my fear is they do 50 based out of politics and not economics, because I can't figure it out economically. I shared this with TRADARS, right? Tradars.com yesterday, my thoughts. I'm like, I don't believe economically it's warranted. But if they do it, maybe it's political. Uh-oh, that would be disappointing. But then if they do it to be political, I would assume they understand this sort of architecture of shifting the skew of the normal distribution to the left, which would be short-term up, but longer-term down, and could cause a significant change in the stock market, short and medium term. Oh, cool. Did I lose anybody, or is that good? Give me some feedback. Was that good? Did you click the thumbs up button or something? I can't even tell. I'm not on the normal page. I guess I probably should get on the normal. Yeah? Yeah? What percentage of YouTubers that you pay attention could draw all that out? I know I'm kind of setting myself up to feel good, which is okay. But I do want to know. Like, I don't watch anybody. I don't watch, right? I listen to DJs on YouTube. But there must be somebody with an economics background out there, no? So I'll tell you, though, when you're hanging out with traders on Wall Street, they do know this. I'm telling you, like when we're talking about fat tails, okay? Like it's assumed you know this. This is like I'm trying to prepare you to be a professional. This is like you're supposed to know this. It's assumed you know this. So like if you show up on Wall Street and you're a Forex trader and somebody says, so what do you think about the Bank of Canada? Are they going to cut further? And you're like, oh, I don't really do fundamentals. It's over, dude. All of a sudden you smell funny and they're like, hey, I got to go. Nice to meet you. Bye. You're like, dude, this doesn't make sense. When you're like, I don't really do fundamentals. I don't really know central banks. I don't really follow interest rates. I don't know anything about global money flow or economics. I just trade my my RSI on the 5-minute. Dude, they just leave. Yeah. So I preach to teach. Number one, born without a gun. I wasn't licensed to have one. Yeah. Best rapper. Best economist / rapper on YouTube. Yeah. The minute you see me, fear me. I'm the epitome. A public enemy, used, abused without clues. I refuse to blow a fuse. They even had me on the news. So anyways, very cool. Very cool. Very cool. Let's look at some scorecards. Yeah, Eskimos got it. Roderick's got it. Oh, man, Public Enemy. Oh, I saw them live once in the 90s. Oh. Little bit of change here. See, most things are flat right now. Like when you're looking at the scorecard summary, which I assume you guys do probably every couple of days. What's up, Silly Sally? You'll notice that pretty much everything's gone neutral. You see? There's nothing really bullish. Why is this not scrolling properly? And there's nothing... Oof, I'm struggling today. Come on now. What the heck? There we go. There's nothing really bearish. And there's nothing really bullish. This is another way to analyze whether you should be keeping your powder dry. Do you understand? 95% of retail Forex traders are just going to their charts and looking for trades. And we have all this information. You're like, dude, keep your powder dry. Not yet. Maybe later today. Okay, right? I mean, it's important, isn't it? So this is an important page. Like you just like, I guess I could buy some CAD, USD CAD. But remember, this is current economics. For example, all my brothers and sisters in South Africa, Jumbo, by the way, they're going to be better off if the Fed cuts interest rates. Because some of their debt is priced in US dollars. And it's expensive to pay for that. So it's like your mortgage. Imagine you have a mortgage, which is, 10 times your annual income, but spread out 30 years. There's an interest rate. So imagine, it's fixed. In the United States, you should have a fixed mortgage. In other parts of the world, it's variable. You can't get a fixed mortgage. So in this case, your interest payments are roughly the same, but if the Fed raises or lowers interest rates, it impacts other interest rates like mortgage rates. So if you have a variable rate, your mortgage could go up, which is bad. But if the Fed is cutting and all interest rates are falling in the economy, then suddenly you'll find out, oh, look, my mortgage is $100 cheaper this month. Oh, it's $300 cheaper the following month. 2 years later, your mortgage is $800 less per month. And you're like, damn, boy, it's good. Well, that's kind of what's going to happen in emerging markets. Okay. Also, they can lower their interest rates. So Indonesia cut interest rates today, right? Am I right? Let me go here. Oh, I'm over there. So all of this is related, right? September yet? Okay, yeah. 6.0. Good, they have a good trade surplus. That's good. So anyways, thank you, Indonesia. Do you think this was related possibly to the Fed cutting today? Yeah, probably. Okay. Yeah, Don. Don, the problem is I've been doing the work for so long, I enjoy it. So I do the week on the street now. Every Tuesday, I download and read all the reports. I used to do that on Sunday, by the way. So I'll sit outside on the back deck and have a big cup of coffee like this. This mug has read 1,000 economic reports with me because it's a big mug, huh? And so I can put a half liter of coffee into it. And I sit, and very often with a cigar, fabulous cigar. And I sit and I print out. Yeah, I know. Bad for the environment. That's okay. I live in Georgia. And I'll read the reports. And I love it. I taught myself to take some grudgery type work, downloading and reading reports. And I'm like, how can I make it rewarding? How can I make it fun? How can I look forward to it? I'm like, oh, a nice warm morning. The sun's coming up over the lake. I got a big cup of coffee and enjoying a cigar that's been aged 10 years. And I'm like, cool. And I'm a trader. I'm an investor. I'm an economist. I'm reading. I'm really doing it. And, and it's funny. It's true. I'm like, look, I'm really actually doing it. See, if you actually read the report, you're actually an economist. So I'm like, cool. So now Don's like, well, now it's all automated. I'm like, yeah, but here's the other thing, Don. One of the cool things about doing the week on the street is I give away all my little secrets. And I guess I should just show you courses, coaching. One of our goals when we meet as a group, okay, this is the week on the street here. All right, hey, welcome to the week on the street where we gather as a community and do the work that other people are unwilling or incapable of doing, and that is actually downloading and reading the real reports. All right, so one of the goals of this is not just getting the facts, because you already have the numbers. QuantBox just gives you the numbers. Well, sorry, the fundamental analytics tool just gives you the numbers, right? So I read the report and we go through the numbers. So you get the numbers again. But now you get it in a narrative, not just quantitatively. So it appeals to a different part of your brain. Okay? But one of the goals is that we pretend that we're going to be on CNBC or Bloomberg television and that we need some sound bites. So we summarize things in sound bites, or I find things that are peculiar in the language. And because I do have an economics degree, I understand these little things. And I'm like, ooh, that's interesting. So like, for example, we compared last night in that video I just showed you, US CPI, which is in the recent past, right? And then PPI. And we could do a comparative analysis. And we found really, really interesting information of where inflation is in the United States, how we got there, and any vulnerabilities or even contradictions between looking at current consumer prices versus prices at the factory, and how they got to that number. And then we strip out certain things to look at the vulnerability in the numbers, and we can talk about this. But you just know it's 2.5. And TRADARS fundamental analytics tool will tell you it's 2.5. And I, as a human being, because I actually read not just one report, multiple reports, I can say, oh, but I know the details under the number. You see? And that is like, yeah. Oh, we have a question here. How do you start to learn fundamentals? Okay, you join TRADARS. Okay, cool. Every member of TRADARS gets access to courses. Oh, I renamed it. I renamed it. That's why. Hang on. But I have to update the link. Okay, good to know. I updated it last night at Starbucks at 9 o'clock at night. Forgot about that step. All right. All right, here we are. So the question is, who had it? Somebody asked. Oh, Forex.Today. It looks like Wizard N17. How does a beginner get started in being proficient in fundamentals? Got you covered, bro. All right, I have probably 30 hours of videos for you. Okay? Cool. The first one you want to start with is probably the older one. This one's easier. And this one needs to get updated. I've been to the Fed 2 days this year, met with them online 4 days this year, and I'm speaking. I'm a speaker at the Fed in November. the Fed asked me to come back in person and speak. Right now, the last time I looked, there's 150 people registered to attend my speech at the St. Louis Fed. And that's in November. That might get closer to like 300 or 400. And they're all PhDs in economics. I'm the least smartest person in the room. Hang on. So anyways, I'm the dumbest person there, but I'll be at the podium, so I'm boss, and that's all that matters. All right, cool. So start with this one. These are all about an hour long. Okay, these are all about, okay, Wizard? Lesson 1, financial markets. Lesson 2, financial intermediation. How to solve the asymmetric information challenge. Okay? In lesson 3, you will learn how to manage the balance sheet of a commercial bank. So once you understand that, then I can tell you how a central bank manages its balance sheet. So when you hear that the Fed is reducing their balance sheet, you're like, I don't understand that. I will teach you. Okay? And now this is how things have changed. So I want you to learn this. This stuff is based on the fractional reserve banking system. I want you to understand all of this. But this is the stuff I'm going to change. Probably lesson 4, lesson 5 will need to change. Because the Fed doesn't do this anymore. They forgot to tell people. So, let me show you. Let me show you. Let me show you. Okay. Ha ha ha. See? I actually went to the St. Louis Fed. Okay. And in the binder, I don't know where it is. They change the way to manage the central bank. Anyway, so the way they do it is different now. Okay? And it's complicated. More complicated than the old way. But I want you to understand the old way. Okay? I want you to understand the old way so that you can appreciate the new way. Okay? And then macro, microeconomics, fundamental analysis, currency correlation, advanced strategies, international trade balance. So there's one. Okay, Wizard? Now, the second one, so that's going to be, it says there's 12 lessons. I think several of these are more than an hour. Most of these are a minimum of 45 minutes. So we'll just say that's 12 hours. Then get this one, macroeconomics. And this will blow you away. So I will teach you a lot of the stuff that was covered at Harvard. Not joking here. I don't do the calculus. I don't teach you the calculus. I don't teach you the math. I might go over the math once or twice, but not for you to memorize. But this is a very, 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 very good course. I know that sounds arrogant. No, trust me. This is very, very good. This, like, let's say there's lots of gurus out there teaching fundamentals. Let's say there's lots of them out there in the Forex world, in the investing world, in the trading world. And they go over things like GDP and maybe the terms of trade and a little bit of supply and demand. Okay, that's fine. Anybody with a community college degree or took a class at a community college would have this information. None of them can go into the degree that I go into, like the solo growth model. All right, that's legit Harvard stuff. It takes me 2 lectures to go through this. It's really good. Like, yeah. Okay, like we are in it now. Like by this lesson, oh, we're in it. This is
your labor force, but we're going to hold them constant and just say Y, right? Output, Y is like GDP. GDP is equal to, or is not equal to. It's not F times K. It's a function of capital. So the better capital or the more capital you have, the better it'll be. So more K increases output. Okay? All right. So, for example,
like, I'm not doing the calculus, I'm using cartoons, but it's good. I'm telling you. So Y equals the square of capital, right? Output depends on.
What does that mean?
Yeah.
Like, how esoteric is that, right? Well, I want you to look at it. I look at it from the left, is how I do it. So do it like this. Imagine this is 1, 2, 3, 4, 5 output, whatever your unit, right? Billions of something. And you got 1 and 2 and 3 and 4 and 5 and so on, right? 6, 7, 8, 9, and 10. Okay. So think of it this way. Okay. Right? Output at one unit of output, so one thing of bread, let's say.
Anyways, whatever. It's good. It gets really good, in fact. Okay. I mean, look at this. I mean, dude, it's good. I'm telling you, look at this. Yeah, money supply, right? The data structure from M1, M2, M3, all that is different measures of liquidity, right? So, but if you were trading Forex 30 years ago and we had no transparency at the central bank, meaning the Fed would cut or raise interest rates and you wouldn't even know. They wouldn't even tell you. So back then, you would look at the money market and learn by activity in the money market, like M1 and M2 money, short-term hot money, and discern what's happening with interest rates. Because to get the interest rate, the Fed would be buying or selling bonds. So all of a sudden, the hot money would pop or drop, and you're like, oh my God, I think the Fed just intervened. The Fed just raised interest rates, right? And so therefore, we really tracked all that, Wizard, in great detail. So if you're a Forex trader or a rates trader, like short-term fixed income, you would track this stuff very closely. M1, M2, right? Yeah. Because it's very liquid, hot money. But now we have too much transparency, and that isn't followed that closely. It's not that important like it was, before Greenspan. Okay. But, like if you want to see some of this stuff. Hang on, where do we have it? We have so many updates. I'm like, where did we put that? For a little bit, we had a little bit of money supply. Maybe if it's not a Forex, it might be in here. Yeah, money supply. Okay, money supply is going up. The impact is pushing Bitcoin up because as that goes up, the value of the dollar goes down. So Bitcoin price in dollar would go up. Okay, so we have it really here, but I don't think it actually matters that much. Okay. So look, will the training courses at TRADARS help you make money? No. And frankly, that's a dumb question. It'll make you smarter. Did Harvard make me money? No. Did it make me smarter? Yes. Did it make me more confident? Yes. Did it help me understand how to make logical, intelligent, rational, repeatable investment decisions? Yes. Can I translate that into, I went to Harvard, spent $100,000, and now I'm up $300,000 since then? No, it'd be hard to do that. But is it worth it? Yes. Right? Yeah. Yep. Oh, TRADARS? I think the button is broken. Yeah, I know it's terrible, right? Yeah. The button is missing an M. So if you can figure out how to do this, you can join. So the base subscription, $97 a month, is the swing trading group. And, well, I can't type it in. I'm not logged in properly, Jim. But type in tradars.com/join. That's what people need. I can't access the chat. I'm not actually logged into YouTube. I'm logged into the software. Okay, this is the swing trading group. We meet live 2 or more times a week. I cover fundamentals on Tuesdays and technicals on Thursdays. And it gives you all the training. Okay? These groups include the traders. It's traders base plus teams. So you can step it up a notch and say, if you want to learn fundamentals like hardcore, I do a video, a group meeting. I do a live meeting every day and record it, going over the fundamentals. And I unlock the fundamentals section for you. And you get the base. So now it's basically every day you have access to me by doing the fundamental trading team and the swing trading green, right? You just need this, $200 a month, and you will become an expert in fundamental analysis. I will be on your trading team as an economist, right? And I will help you make better decisions. And I will teach you fundamentals. Yeah, like, that's it. Like, I will fix that, wizard. You're like, you want a better understanding of fundamentals? Join the fundamentals team. Fixed. Done. Yeah. Problem solved. Cool. All right. So, look, everything's frozen. Okay. Again, we can go to the risk gauges here. Frozen and even risk off a little bit now, huh? Yeah. Yen potentially strong for a little while here. Yen potentially strong. This is all in the last 25 minutes since we've met. Pound yen down, possibly a breach of a rising wedge. This is showing me the market is likely stalling out. Look at this, all the yens. A big pop. Look at the big pop in pound CAD. Okay, so I am sitting tight here. This is what I was talking about earlier, fundamentally. When I was talking about my brothers and sisters in South Africa, okay, being better off, check this out. That's good for South Africa. What that is saying is their debt is getting cheaper. The debt priced in US dollars getting cheaper, and that's advantageous for South Africans. And we have a down channel, and that's good. That came out about an hour ago. Yeah, baby, yeah. That's good. Yeah. Okay. Here it is on a 15-minute chart. There's that pound CAD. Whoa, what? Yeah, nice. Look at that. Look, let me zoom in on this one. It's interesting. Now, I'm going to ignore probably everything until the Fed news comes out, but I'll tell you what I normally would do. Okay? I would look left, drag that across, and then I would look for a pop. Oh my God, that looks good. Yeah, neat. Neato. Nice. Cool. I'd definitely open up that chart. Pound is crushing it, huh? Yeah. Yeah, pound is crushing it. I'll show you, like, here's a neat trick. Okay. These are upcoming webinars, so you can go to past webinars. Yeah. Do you think it's the UK inflation report that came out at this webinar, UK inflation? Okay. This webinar was 1:45 in the morning. We did a live event at 1:45 a.m. Here it is.
May I remind you that trading is risky and not suitable for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you can afford to lose. Welcome to News Trading. My name is Jessica Sierra Ryan, and I am going to take you through today's UK inflation report.
Nice! Okay, and what was the outcome of that? Yeah. Pound a poppin'. Huh? The pound poppin'. Yeah. Cool, huh? Pound Oscar Mike. The pound Oscar Mike on the move. Pound, huh? Pound. Look at the pound. Wait, what? Yep. Cool, right? Cool beans. So we covered that live. Look at A to B to C. Target here is 84. This came out 3 hours ago. Target 84.25. Yeah, we're almost there. Lovely. Okay. Pound CAD crushing it to the upside on the way up. Pound Swissy. Ooh, that's interesting how that's interesting. Delete. Yeah, because, it's supposed to, But the rising wedge here is pretty mild, huh? I'm looking at the steepness here. Hey, do you guys like Gartley's? I don't. But maybe you do. Okay, cool. You can go out and look at longer term stuff if you're more of a swing trader than a day trader. Oops. Here's the longer term stuff. Okay, daily charts, for example. So here's that Rand. Okay, so watch this. This is South African Rand. I guess I can pop this one too. Let me pop this. South African Rand. It's been moving sideways. Okay, I would draw it this way if I were me. Okay, I just look at that. The way I trade scenarios like this, right, is I teach you how to do a trap and break. So you let it break, you let it pull back, and then you're gone. But you still have to understand what's going on fundamentally. The downward move, the change in direction this way, is based on assumed Fed cuts. Not just one and done, but cuts for the next 2 years. Every time the Fed cuts, this will benefit South Africa. And that is likely, logically, we don't know the future, but it's logical to think that we could develop a sustainable downward trend. I think, let me redo that one. I want to make it parallel, okay? But anyways. And so this could be the beginning of a beautiful relationship between you and the South African Rand. The more the Fed cuts, the better South Africa is because their debt keeps falling. Again, imagine every month your mortgage got $100 cheaper, which means every year your mortgage is $1,200 cheaper. And that's going to happen every month for 2 years. Oh my God, you're going to have $2,400 more disposable income 2 years from now. Oh, how do you feel? We call that the household wealth effect. I talked about that yesterday in our fundamentals meeting. Yeah. We discussed things like household wealth effect and behavioral finance. We discussed all that. So anyways, this is how I would be looking at this. Fundamentals and technicals. That's why I added fundamentals to TRADARS. So we have fundamentals and technicals. Yeah. Yeah. And then inside of that, we look at vol, news vol, scalping vol. We'll put this one up. Yeah. Okay. Oh, look, it's different now. Oh, it's a new hour. Okay. Remember WTI? What did it change? Don't do WTI anymore. Do pound Swissy. Isn't that funny? Now, in theory, what I just described for South Africa is the same for all emerging markets. So let me thread this needle for you. WWWD, what would Wayne do? Now, I don't know if this is right. It's just my logic. I would look to sell here based on the logic that the Fed is going to cut, and that's going to be beneficial to Mexico. Oops. Okay. So you're going to get likely a down, a retest, and a down. That would be, again, that's theory. Now I have to drop into a smaller time frame, catch the rollover, and actually do the trade. And if it's a day trade, I can put my stop above the 4 hour because measuring 6 months of volatility on Wednesdays at 10 o'clock on USD Mexican peso, it's very unlikely to go higher than that over the next 4 hours. If I was going to swing trade, I would put it above this. So I can short this for a day or two, or I could short for a month or two, depending on the duration that I choose. Duration in time, not sensitivity to volatility. But like if you're going to swing trade this, I would expect this to be a lower high, because remember, I'm swing trading as a bear. Lower high will produce a lower low. Then there'll be some profit taking. It'll come back up. Okay? And we'll kick off maybe tomorrow's low. Okay? And that'll produce a new lower high. And then I'll take it down to the new lower low. So even though this is saying, hey, there's a daily target. No. It's not a target. It's not a target. It's the low, the average low of the daily range. But if you understand fundamentals, you might be short this for 2 years, son. You might get 100 trades. If you are a portfolio builder, you stack them and pack them. You own the peso. It's yours. Because interest rates in the United States are going to drop to 3%. But in Mexico, they might be 8%. And the carry, right, is 5%. But you're leveraged, let's say you're outside the United States, 100 to 1. So it's like a Mexican peso bond, because you're lending money to Mexico. You're only putting up 1% collateral. So on the 1% internal rate of return, that's what that means, of the money you actually have involved, you will earn a 500% yield annually, not including any of the pips. Holy. Oh my God. Shut the back door. And the pips are worth more. But of course, if you don't know this stuff, you don't know. You don't know. And you probably pass on this because you're going to tell me I can't trade it because the spread is 200. 200 pips on the spread. I can't trade that because it's 200 pips. You know what that means? If you actually add up how much it is, let me say, what if the euro was 2 pips for you, and if a pip is worth $1, and Mexican peso is like, I can't trade it because it's 200 pips spread, it's huge. But if it was $3.50, meaning the actual, what is the value of a pip for peso? People forget, they're like, I can't trade it, it's 200 pips. Yeah, which is worth $2 or $3.50. I'm just making up numbers here, right? You're like, you are walking away from an opportunity that has beautiful technicals and fundamentals. It's going to pay you 500% income if you're leveraged 100 to 1. If you're in the United States, it might only pay you 250 to 1. Okay? You're going to walk away from that because it's going to cost you $1.50 more per lot. Really? You're like, no. You just, all you see is 200 pips, which tells me you don't understand. You have to convert the pips into money, bro, into dollars or into euros. And what's the actual cost to you? Maybe it's a little bit more than euro, but really, you're going to walk away in the United States from something that pays you that much and has this beautiful technicals and has the fundies behind it set by central banks, and you're like, yeah, but it cost me $1.50 more than the euro. And I'm like, all right, you don't get it. You see, you know what I mean? Yeah. So Wizard, I'm not quite following the conversation that some of you, I think you and Sal are having back. But let me say this. If you're going to be a professional trader, you have to know fundamentals. And that is not a joke. I'm not selling my own service. I know many professional investors. The only thing we talk about are the fundamentals. You wouldn't last even 3 minutes in a conversation if you found yourself in New York City at a fancy event with lots of hedge fund managers and other professional traders, and you're like, I don't understand any of the fundamentals. What are you guys talking about? You're just, it reeks of amateur. Like, I don't know what you would talk about. You would have nothing in common. But when I'm there with my buddies or at a conference with only hedge fund managers, what do we talk about all day? Like, we'd be talking about the Fed right now. And we'd break it out, 50 or 25. And I'm like, well, here's this fundamental thing. Here's this fundamental thing. Here's this fundamental thing. Here's this fundamental thing. And they're like, oh, well, but if you look at this other fundamental, and you look at this other fundamental, and if you look at this other fundamental. But we're not talking about our pound Swissy MACD on a 15-minute chart, right? So it's just like, dude, you have to know this. It'd be like, well, all those Wall Street professionals are wrong. And based on what my 22-year-old YouTuber tells me, it's all in the price and fundamentals are stupid. Oh, really? Does that 22-year-old manage $1 billion? No. How about $1 billion in a month? No. Are they licensed and registered? No. Do they have any college degree in anything in economics and finance, or maybe a master's degree from an Ivy League? No. Then what the hell? Right? So, no, you need to know this stuff. You absolutely 100% need to know this. But you can borrow my Harvard degrees because I work for you. You can just hire me by joining TRADARS. I work for you. We meet several times a day. You're my boss. You can brag. You're like, I have a Harvard economist on my team. And we go over the macros, right? We go macroeconomics on a daily basis. Yeah, sell. And maybe that's what TRADARS is not for. TRADARS is a Bloomberg terminal for retail Forex traders, or retail traders and investors. Sorry, not just Forex. All right. What does that mean? You need to act as if you are a professional. Now, you don't have to have $1 billion to make professional decisions, but I can take the randomness out of your trading. I can bring consistency to your trading. Okay? Imagine you did things like you started with fundamentals first. Okay, let me show you, and then I got to go, right? We all got to go. I'll show you first. Let's go to a scorecard. I guess, well, we can do this right here. Let's do a Forex pair. And I shouldn't have done that. I can do it here. Okay, let's pick something bullish. EuroCAD. Okay, none of us is probably watching EuroCAD, but we should be. In fact, the score went up last night. All right, so we got a 5. Cool. Step 2. Do we have a bullish setup on EuroCAD? Let's just turn everything off except EuroCAD. I'm only interested in bullish setups on EuroCAD. We have one. Now it's a down channel break. So what we want to do is go to our chart and look for, the consolidation to break, pull back, and then our buying opportunity is here. It's on a daily chart. Nothing else exists on EuroCAD. Not on a 15-minute chart, not on a 30-minute chart, not on an hourly chart, not on a 4-hour chart. TRADARS has looked, it's more than 12 now. It's probably closer to 15 patterns. TRADARS went through the 15, 30, 60, and 240 charts, and looked at all those charts and said, we want to find repeatable patterns. There are 15 patterns. They're all reliable, repeatable patterns. Do any of these 15 exist on the 15-minute? No. Do any of these exist on the 30-minute? No. Do any of these exist on the 60-minute? No. Do any of these exist on the 240, right? The 4-hour? No. But one of them exists on the daily. And it's a down channel breach, and it will probably take several days for it to form. But probably somewhere around here, you'll be buying next week. Shut the back door. So what if every single trade you made was based on sound fundamental principles that look at macroeconomic data, and in the sense of EuroCAD, did comparative analysis of the macroeconomic data of each economy by looking at 18 different subcomponents of the Canadian economy and the European economy, made sure that being long was logical, and then you looked at 15 patterns on 1, 2, 3, 4, and really 1, 4, 4, 4, 4, or 0, right? 5 time frames. 15 times 5. Okay? 75 different technical perspectives done for you instantly. So now I'm like, yeah, okay, if I can catch a dip next week, I can do that. Cool. So now, okay, now I can go to my chart. La 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 la. And I can say, oh yeah, look at that. That's why it's pulling back. Oh, it hit target. Look how beautiful that is. Oh, shut the back door. Okay, cool. So now I'm like, okay, how do I thread this needle into a trade? All right, so between now and next week, this is next week's buy zone for swing traders. So between now and, let's say, Monday, I'm very interested in looking for opportunities that set up like this. Okay. Yeah. That would be plan A. Now, it could come down further based on price action. So plan B would, this never sets up and it falls further back down to 50, but then I'd catch a counter trend trade. So I have 2 plans now on the 4-hour. I want to double check now on the daily, because remember, we set all of that. And yeah, so I'm either going to buy off the daily 5 or the daily 21. So now my job is to, when it gets down near those prices, oops, delete. When it now gets down to these prices, I'm RWA to observe on a smaller time frame, higher high, higher low, higher high, higher low, and get myself long. Now, if that's not going to work, what you'll find is around this price, it fails to make the higher highs and higher lows. So I'm confirming everything with technical analysis on a small time frame. Now, I can allow TRADARS to do that because it's not going to miss it. TRADARS won't miss. It doesn't get tired. It doesn't make mistakes. So I can wait for the TRADARS signal and say, that's my signal, boys. That's my bus. Gotta go. Now, if it doesn't bounce there, okay, then the price will probably be around here at that point. So we can look for the same thing. Maybe it drops down here. And then on a 15-minute chart, higher high, higher low, higher high, higher low. Now I long bomb it, and my target is here based on sound technical analysis. But remember, all of this is set up by sound fundamentals. Okay? And if you are learned how to swing trade in my swing trading group, you already know that this is a buy. And this is the target. You already know this. So your assumption is higher high, higher low, and we're actually going to go to 52.50. You already know that. It's obvious. But it's all been set up and it's all logical. And now you have tools watching the fundamentals and technicals, and now you're a freaking superstar. That just happened. All right, so in a couple of hours, in 3 hours, we are meeting for the Fed meeting. Who's going to meet? Who's going to join me for the live Fed meeting, interest rate decision, and press conference? Who wants to join me? Yeah, baby, yeah. Just one last reminder on how to do that. Log in. Go to coaching. And right there, Fed meeting live. Okay. You got to click here, or if you actually click the meeting, you got to RSVP. Otherwise, I don't think you'll get the link. You can't just sit here and wait. You have to RSVP and it'll send you the link. It's so simple. It just does everything automatically. Okay. Now, I don't think you guys can see all this stuff. That's what I see. So we got a good crew. We got almost 40 people. Please attend. Please attend. Please attend. Please attend. Peace on earth. And I mean that, everybody. Peace on earth. May the pips be with you. May your profits be above average. And I will see you at 1:45 Eastern Time. Fed meeting live. Have a wonderful day. Keep your powder dry.